Hello, YouTube. This weekend, the stage is set because we continue to print weekly higher highs and higher lows, but we have a record short 344,000 contracts, and the market stampedes turns favorite defensive trades into the danger zone. Let's jump straight in and see exactly what is happening. So, this week, I'm saying the stage is set because, and we're entering the danger zone as that article noted, because we have a doji. A doji means it means indecision. So, as we've been going higher, I'm talking dramatically. 9%, 10% off the lows. We took a pause. So note the numbers here on the right-hand side. There is a green one, a white one, and a red one. Green is support, white is important, red is resistance. So we note that we have a high here from our March 27th power pump week of 409.7. Our low this week is going to be 410.17, which means we backtest and held that 409.7 area. In addition to that, we also closed above 41192, which is going to be the April 3rd high. What does that mean? It's constructive. It's very constructive. We have higher lows and higher highs, but we all know that the market takes the staircase up and the elevator down. So we don't want to ignore that. The price action and the range has been getting tighter and tighter, and we have an ascending triangle, which just means we have a very flat top here, but we have an ascending low, which means we're going to get a decision to either go higher or to go lower. And this is going to be very important because when we look here to QQQ, this is where things are similar, but they are not exact. And when I look here, what I'm noticing is just that we have a flag forming, but we're actually in a monthly failed breakout. So I'm going to show you two more charts, but if you stay tuned with me all the way till the end, I will make sure to leave you with a very clear plan of attack going into big tech earnings. This week, we have some big economic data like GDP, core PCE. We got the Fed calendar coming up on May 3rd, and we've got big earnings. So please make sure to stay tuned, and we will walk you through all of that. So now what I'm going to do is actually remove all the lines, go to a 1-month chart for the S&P 500, and note that if we are still expanding or above the March high, that means we are in expansion territory. We have a higher low and a higher high on the monthly chart for the SPY. Why? What does that? Why does that matter? I just showed you those levels on the weekly, and as long as we remain in a higher low and higher high, but the most important thing is that we are over the monthly high at 410, basically. I think that we're okay. If we lose that area on a daily closing basis, on a weekly closing basis, that is where the downside is quite high because we could go down all the way to 380. So if you want to make sure you're prepared for that, what we mentioned last week was that you want to make sure you hear the warning, not saying exit the market, not saying get all out, but the saying is sell in May and go away and come back on Labor Day. So May is just around the corner. S&P still looks okay, but we all know things are bullish until they're not. So if we look here to QQQ, what do we know? Well, we got a monthly failed breakout, which means that we have a very similar pattern. I'm now going to grab the horizontal raise and just snap some lines here to give us some context. We got the green line underneath. Then we're going to snap a red one, which is going to be last month's high. So what do we know? Well, this is like simple. If we're looking at a high time frame chart, we note that we have a higher high, a higher low. We bounced off of the February high at 31368. Our low here is 31257. That's a bounce, but we're stuck inside the range now, which means we're inside the highs from these months. So we're really just going sideways, which is really what we've been noticing on that seasonality chart. So as long as that continues, I think we have to just be very mindful of it. So one more very high level note before we jump in is just that sideways price action is very evident on the weekly, on the monthly time frame. It is also evident on the daily. And the reason why this matters is because if we look here, this is for the S&P, but the NASDAQ's been a very good leading indicator. So what I'm really watching for is, have we made higher highs? And then have we made higher lows? Meaning, are we holding the March low, the April low, the May low, the June low? These should all be monthly higher lows. So what's going to be so important for me is if this is the low, again, if it's the low, we're into the last third of the month. We got about, I don't know, like 8 calendar days left, 7 calendar days, a week and a bit of trading. If we hold this this low at 312, and then into May, we hold the low again, I think we can slowly build up pressure to get over here if we're not going to do it immediately. Other thing I would note is the same thing on S&P. So S&P, if it can hold the 405 area, higher lows would eventually mean that we're going to either test this 420, 430 area on the monthly chart. We have our wick going all the way back to August. This is going to determine whether we birth the bull above 418 or we don't. So I really think that the story is easy for me this weekend. I'm going to ask you for a huge favor as we're getting started, though. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate it. All right, let's jump in deeper. So we talked about the seasonality chart. I'm just looking for higher lows and higher highs. We talked about the record short. These guys are either really smart or they're really dumb. So please, or very stubborn. Sorry, I'm not going to call bears dumb. Stubborn. So drop me a comment and tell me what you think. Are they stubborn or are they onto something? Markets stampede turns favorite defensive trades into the danger zone. Bank of America finds big tech and investment grade credit are most popular long plays. Goldman Sachs sees value in neglected low volatility stocks. What does that mean? Boring stocks are not in favor, and high flying and investment grade, which means like very good companies like Apple, Microsoft, or the government. But, anyways, looking at recession watch, we see a rough mid 2023 for equities, which appear prematurely, we think, to have looked to be on a recession that hasn't even started yet. That's right. Market price is in the recession when it sees it. But what we want to think about is if we are going to go higher or we're going to go lower, are we betting on the right horse? Because asset class returns going back to the GFC or the Great Financial Crisis of March of 2009 to April of 2023, investing in the US is still the best game in town. It gave you 16%. Cumulative returns of 700. Non-US developed equities, 10%. Eurozone equities, 10. Emerging markets, 8. China, 7. So again, past performance is not a predictor of future, but it looks like the US is still the best game in town. So if we're noticing patterns on the weekly, patterns on the monthly, and we're also aware of them, let's make sure we understand what the bull and bear thesis is going into the sell in May and go away timeframe. Because we're at a crossroads, we also note that we have some very bullish people like Tom Lee from Fundstrat who thinks that we're going to go to 47.50 by the end of the year. And down here we got Micah Kantrowitz saying 32.25. The median or the middle is roughly 4,000. So that tells me, okay, well, if we understand both of these stories and we look at recession coming into the second half of the year, which is almost consensus now, can we understand what's happening? We talked about the most crowded trades are going to be big tech and investment grade. We have earnings coming out this week. That's going to really matter. Also, pricey could get even more pricey. Technology stocks are near the most expensive relative to the broader market. Okay, so .com, boom, they go up to 3. They come back down to 1. And now they're 3.5, backtesting 3. Is previous resistance going to become support, meaning it gets pricier? Or is it going to come back down to earth? This matters because we have to think about what is coming up on March 2nd or 3rd. And if you stay tuned till the end, I promise I will leave you with my clear plan of attack. And then I'll tell you what I think is going to happen going into the Fed, whether or not we go up or down this week. I have a different story. So we're looking at the Fed balance sheet where it's now reduced for the 4th consecutive week, which means that if the Fed wants to go higher in May, like the market's priced it in, it looks like the regional banking crisis is subsiding or not as bad. We look here to 2 key things as the takeaway. So the first takeaway is that the bullish story is tech is going to lead us to infinity and beyond. This is a monthly log scale line chart. I've overlaid a psychology chart over top. I originally shared this thing on March 18th. It's about a month later now. Hey, so far this looked pretty good. Higher lows, higher highs on the monthly, looking pretty good. So we just have to be aware that we could get a sudden drop at any time because look at these cuts here, pretty big cuts. So on the way higher, it's not going to be a straight line either. We're probably going to get some nasty cuts like we did before. There's your bull story. We went through the monthly chart on QQQ. Now, if we look here to the monthly chart for S&P, this one is eerily similar. And we talked about the timing for this, but I just want to point out one key thing here. It's that this is a monthly log scale. So it's a monthly log scale. And I would note here on the psychology chart, we have these 2 cuts. Well, we have those 2 cuts here on the line chart for S&P as well. And if we're not able to clear this zone, which for me is roughly 425 to 430, and again, we just went over those areas on the weekly and monthly charts too. That's our August high, and it's the birth of the bull. So 425 to 430, it tells us that if this is going to repeat, we're gonna stall out here. Eventually, we're going to print lower highs and lower lows on the monthly, and that is how we could, again, keyword being could, recreate the rest of the psychology chart. So if we're aware of what the monthly is doing, until we print a monthly lower low and a lower high, the trend is either sideways to up. And we just went through that. So hopefully you were paying attention. If not, rewind, replay, and watch again. So the last part I forgot to mention here is that I'm asking myself whether or not on a monthly time frame, we are noticing that this emotion is what's driving the market. And here I'm talking about euphoria, which was the ultimate bull market. And then actually one more thing I want to show here, because if we think about the wall of the opposite of the wall of worry, it's the slope of hope, which means everyone thinks, oh my God, buy the dip, buy the dip, buy the dip. Oh my God, buy the dip's not worrying. Now I'm worried. So why would they be in the slope of hope? Well, because they're euphoric. It's worked out great before. Only booms, right? Boomtown, baby. Whoop. All we do is go up. So what do you think? Well, this dip is just a really nice bargain. So you're a little bit complacent because it's been so easy. It's gone up so much. And you're like, well, we have to just cool off before the next big rally. And that's kind of what I am feeling myself looking at when I'm looking at my portfolio and saying I want to go away on holiday. I'm starting to get a little bit complacent. I want to go away in May, but I don't want to sell out. I don't want to sell in May and go away. I want to be protected, but I do want to still be in. And I've been feeling those emotions creeping in, like we have to just cool off for the next big rally. Time to go all in growth, all in tech. Also, by definition, what complacency is elevated greed, but not very good price action. So we look here to our timeline. We went to, I think we went to as high as about 68. We went like 70 intraday, but we're closing at about 68 is the highest. And we're just trying to go sideways. So this is the sideways part. We went straight down. We went straight up. Now we're going sideways. So sideways is what? Before we start going up or down again. Stocks can only do three things, as you guys always tell me. So anyways, earnings for this week. Here's what matters. We talked about the bull case. We talked about the bear case. So here's what I'm looking at specifically. And thank you for watching all the way until now. And if you're interested, again, you can join us for 14 free days to see what I'm going to do with all this data to package it up and make some money. And I'm going to be away in the month of May. So next weekend's probably going to be the last video for at least a few weeks. Anyways, we got Microsoft, Alphabet, Meta, Amazon up. What are they going to report? They're all expecting beats. Meta and Alphabet have the best beats expected, but they're all going to be, again, for this quarter. What's forward guidance? I don't know. But after regional banks stabilizing, basically closing the week out flat, the focus is going to shift to big tech. And the reason why that's going to shift to big tech is because of that psychology chart I just showed you. So if the QQQs or the Qs are going to rejoin that monthly higher high club, they have to get back above 321.17, which is going to be our March high. And then if we close the month out above here, that would mean we're looking a lot more like SPY, where QQQ is going to drag us for that fresh leg higher into summertime, which is exactly what the seasonality chart tells us. So reclaiming the previous monthly candle high is extremely important for me to continue the expansion. If not, we're going sideways and maybe we're going to start going down. On the flip side here, against big tech, there are two key dates I'll be watching for high volatility. It's going to be Thursday, the 27th, when we have preliminary. That's why there's the P here. Preliminary Q1 GDP coming in for the quarter over quarter, coming in at 2.0. So from 2.6 to 2.0, that looks pretty good. I want to see what the reaction is to the data on Thursday. Is good data good? Is good data bad? Is bad data good? Is bad data bad? I'm not sure. Paying close attention. And then as we look forward here to Friday, April 28th, we have core PCE coming in at 0.3, which is going to be a repeat of the previous reading, but I didn't do this ahead of time. Let's actually look and see what the two days are, because with earnings and inflation coming in, I think this is going to be the last data print before the Fed is going to be meeting. What do we got here? So we got core PCE, which is going to be the headline number, going from 4.6 to 4.5. Employment costs going up a little bit. And then we don't have the PCE for these ones quite yet. Those will probably come in later. So this has actually been revised down. Before it was 0.4, and I believe this one was 4.6. So this is actually looking even better. Is it going to be bullish? Well, let's look and see what the Fed has to say on May 3rd. So because you watched all the way till the end now, I'll show you what I'm looking at. So May 3rd is going to be next week. And that matters because we have Apple, I believe, the day after. Yes, on May 4th. So Thursday, May 4th, we have Apple coming out. That's the big dog. That'll be the last one. And we have that Fed meeting on May 3rd, which will be the day the Apple will be reporting the day after the Fed, after Jerome Powell tells us what he's going to do. Is he going to pause? Is he going to do anything? This meeting also does not have an asterisk, which just means that it's not a meeting associated with an SEP. It should bring lower volatility. It should just be status quo. Will it be? That's the part that I'm not sure about. All right, so in terms of a couple of charts, I showed you everything else now. Here's what I'm looking at. So for QQQ, I see about a 5% move down to support on the uptrend, or about a 5% move higher to 334. What does that mean? If you're already along, manage your risk. We're throttling the math number of 313 or the Fibonacci 38% retracement. Volume still looks fine. We're still pointing up. We're above key averages. There is no death cross yet. So this looks constructive. We have to just be mindful that if we dip down 5%, are we going to be looking to buy on support, or are we going to be looking to sell, right? If it's on strong support, we should be buying, not selling. And if we hit resistance, are we going to be selling, shorting? What are we doing? Well, it's one for one risk reward if you're only buying in fresh right here. So complacency is where we go sideways for a period. They put you to sleep. You get bored. You get sleepy. And then the big move comes. So because we're going sideways right now, above key resistance, with 5% higher and 5% lower, I don't see much advantage for either team right now. However, if we look at a few different charts, here's the last thing I want to point out. So if we go sideways into, I don't think we're going to go sideways this next week. I think this is the week where we're going to move. It's post OPEX. If we get a move down, I believe that into the Fed, we're going to go higher after that. Why? It's just what would make me more comfortable. It's like if we rally into earnings, the stock has to deliver something extra on earnings to keep going higher. So when stocks don't run into earnings, they can have a much better chance of actually going higher. So if we're rallying all the way into the Fed, which is what the stock market's earnings are, I think it's going to be harder for it to keep going higher after. So if you're a bull, I would like to see it actually dip down, actually break the chart a little bit, scare the bulls, see if the bears get enthusiastic, and then rip their face off. On the flip side, if we advance closer to 330 going into the Fed, I believe that could be a sell where we come back down to support, eventually find direction going into the late part of the summer. This corresponds with the end of July, which is going to be the end of the quarter. Actually, we got April, May, June. So that'll be the start of the third quarter into July. That'll be very interesting. Are we going to be higher or lower? At least for right now, we're range bound. Exact same thing on SPY. SPY is just a little bit more bullish. It's also battling for its 2018 and 2020 all-time high. So remaining above the blue line is like pretty constructive. We're also noticing from the weekly level we looked at earlier, this looks pretty good. All right. Last things I want to point out here, just as we're going into earnings this next week, I want to have a look at a couple of very specific charts because I think these are leading indicators. So here I'm going to first of all jump down to SMH. So these are the semiconductors. And the reason I'm looking at this is the reason why we talked about it on the Friday stream. We note these upper wicks here. So we got these nice upper wicks. It's usually been a sign of a reversal. So we're usually going to go down when we get those upper wicks. It's starting to look head and shoulders-y. And we're doing the opposite of the higher lows and higher highs. We're doing lower lows and lower highs after an inside bar. So we have our big hammer. We get a lot of dip buyers, which is why we have the lower wick. Volumes drying up. We got lower lows, lower highs. It's looking a little soft. It's strong. Like if we zoom out here, oh my goodness, is it strong, right? But that's one of them. The other one here is ARC, where this also has a weekly breakdown. So it's a breakdown because we have something here where every time we hit the 50, man, it's like, man, just sell it. It cannot print a weekly higher high. It can't get it up. And we had an inside bar. We have a second inside bar. And now we got the crack. We're not quite below last week's low, but it's pretty close. This is looking pretty soft. This is not something that gets me excited. So I think there's two more quick charts I want to look at here. I showed you the momentum. That'd be for QQQ. Regional banks are doing okay. They're only about 15% of the lending, though. So if I look here to XLF, a better representation of banks. Here I'm just noticing that banks are doing pretty good, right? Nike Swoosh just starting to do it. Are they going to reclaim their highs? Or is there going to be more disappointment? Most big banks have already reported. So if they can reclaim that 50 MA at 33.72, it looks like it might want to go up. Two more things I want to look at here are going to be Dr. Copper and then oil. Why? Well, there's big moves this week. So if we look here to Dr. Copper, Dr. Copper has a pretty big candle here, down by about 4% on the week. Dr. Copper is usually a sign of, again, a cooling economy. So that GDP print and the reaction is going to be very important for me this week. This candle is just it's completely red. There's no wicks. It looks like it's a power slam. Doesn't look good. And then oil. Why am I looking at oil? Well, because we had OPEC tell us that they were going to do a price cut. right here on the week of March 27th. We get our gap up. We're now, so the close here was close at 75.6. We're $2 higher, right? That's it. So there's demand issues where supply and demand is what drives the market. Well, they're cutting back demand, but they're cutting back supply, but there's not enough demand to make the price go back up. So this is also a warning for me that the economy is cooling. That thing we talked about at the beginning about the recession coming. I think I'm probably going to actually one more here for risk assets. Bitcoin's down it was down as much as 10, currently down by 9 on the week. And that same pattern on the monthly here. Yuck. Monthly failed breakout. Big upper wick. This is starting to look like a reversal candle if it can't get it up or just do it. So thank you for watching. I thank you so much for being here. There's a weekend video now queued up here on the left-hand side. But if you want to see what I do to package up all these notes to make a game plan for the week and you want to come trade with me, go to thealgo.com. Thank you so much for your support. I will see you on the next video.